Good morning, good morning, good morning. Welcome back, everyone. Happy Friday. I know a lot of you are excited in your lawns making your money. Congratulations, because I lost money yesterday. I was short and I did get, I think I got 3 stop losses yesterday, and that's when I had to walk away. I am still in my Bitcoin short. Let me double check. And if that gets hit out, I'm okay. My stop loss is at 31,150 and I'm 74% in the loss. And it's okay. This is what happens with trading. I'm completely comfortable with that. I took out a few spot coins that I'm trading with spot. It's not leverage USDT. I'm fine. Don't worry about me. What I want to point out is why did I take that loss? Like, what is going on right now? What is my rationalization? Step one, everyone is excited looking at ETH pumping and Bitcoin pumping, but are you guys logically watching that right now Bitcoin dominance is shrinking and the cryptos are running? So this is like a very interesting scenario. Secondary, I am not looking at ETH upgrade as the cause of the pump or people not selling ETH as the pump. I'm focused on dollar index taking a hit because euro is appreciating higher than dollar. So that to me is a reason why select people are probably getting out of dollar and reinvesting it into such a stock market because Nasdaq was pumping, or crypto because they're taking more riskier assets due to inflation being calmer than what was expected. So as we got the PPI and CPI data, people were told that inflation was being under control, and that made them take more riskier trades. And this was all explained to you on those previous videos. Now, Dixie did close outside of the Bollinger Band and it got a new low. Now you see a wick. Where is this Dixie going to close? We had a bullish divergence that was negated off of that huge sell off. Well, we are on support. Yeah, we poked it, a little bit here and there. I can understand if this consolidates here because Dixie likes to consolidate a while. That's fine. I want to see the consolidation here and then test back up. I don't want to assume that Dixie is gonna be saved here because of the fact I'm gonna switch to a weekly chart. And now on the weekly chart, you can see that if we close under, what was it, 96? Let me double check. It was 101.18. Okay, so if we close today under 101.18, then I will look for next week continuation to about the 99 to $98 level. And that's where we will see next week if we will find support. And keep in mind, if this like actually comes to fruition, you will get that nice extension on Bitcoin, ETH, etc. If this um, consolidation does get picked back up over here on the daily time frame and then come back up, we're still gonna be facing this crossover. Okay, so we're gonna have a little bit of resistance. We're gonna have a little bit of consolidation. Ideally, I don't want to go under $99 or $98, but that's what I'm planning for now if this 101 is lost on the daily and weekly close today. Okay, I know yesterday was lost, but I'm gonna wait for the new candle on the fresh open and closed candle to prove to us that yes, we are gonna break down. If today we come back and close inside the channel, then I'll be more confident as hey, we might grind this out a little bit longer and survive on the weekly Bollinger Band. The goal is we need to close above that $101 level though for the weekly, not to look for continuation next week. So this is what we're going to find out today as markets open. Now let's go look at the good stuff. And it wasn't Bitcoin, that's the cool one. It was ETH, but we'll go to Bitcoin. So I had my alerts here and here. I took this short over here. It was like around 30,000 something. Just for disclosure's sake. 30,300 is where I took it because I was looking to DCA into that 30,400 or $30,500 level. So I took a short like around here. And that was because a couple days ago, the target was uh, 30,000 psychologically, 30,500 because of Bollinger Band, and then 32.5 because looking left there was a level of resistance, and then you got your 34 and 36. I don't want to say 32.5 anymore, but 32.5 is right here. This past peak over here is why I was saying 32.5, and that probably shows up on the fib as well. 32.5 is the bottom of the bearish order block from the breakdown of Bitcoin truly. So I mean 32.5, a little bit of resistance there and a tap into that level makes sense. 32, not 33.5. Due to this wick right here. Yeah, 32.5. And if we claim that, then we can go to those higher EMAs such as 34 and 36, which I was looking for over here. So this is the target I was looking for because we were kind of presuming that the golden cross here was going to give us that next leg extension up, and that's kind of what is occurring, as you can see. When we started crossing EMAs over the blue, the 21 over the blue after this consolidation, you got this next leg up. Well, this was the fake out kind of situation that like I don't know who else took a loss. I would have taken a loss on it. I did on ETH. I didn't do it on Bitcoin because Bitcoin I had that limit all the way up there toward that alert. But as you can see, the EMAs were looking to cross over here. We consolidated, grinded. What happened then was somebody market bought. Someone saw this cross was occurring, okay? And then they instantly market bought at the top, and this is right when I was showing you guys YouTubers, positions, people getting greedy, FOMO kicking in, etc., etc., etc. So just be aware that, we are overextended, we are overbought. There are multiple bearish divergences. Bearish divergences in a bull market is a trick for the market maker to pump into them as they are trying to liquidate shorts and collect stops from anyone trying to short and not taking profit quick enough on the 21. And if they get caught on that, this is what happens. So this was the warning I gave for ETH yesterday, and I actually got in that trap myself. So I will show you ETH after this. But right now, what we're looking for is that 32.5 on Bitcoin. If this 30, let's see. If you close above 31,100, basically my stop loss, you on a 4-hour open and close, you will basically look for that 32.5 on a 4-hour open and close target. Claiming that, you can go to 34 to 36. Okay, keep in mind that 35K is a very psychological level. Like 30K, you might get a little bit of consolidation in the between these two EMAs between 34 and 36. So just be prepared for that. That's why I'm not really looking at 32.5 as anything other than a pit stop, but do keep 32.5 in mind due to the resistance looking left. But if you go and look closely, the consolidation of the order block is in this little 35K range. So be prepared and ready for that. Another thing I'll tell you is in bull runs, the weekly trend usually is counter to the weekly trend. So if you pump throughout the week, in the weekend you get your retracement and you continue back when CME opens on Sunday to Monday. So please be aware that we are an overextended situation. There's someone doing something. This is not, no retail got money like this. Okay, I'll tell you that right freaking now. This is big money trying to markup price, and they are, I mean, here's one markup. I don't know if I want to count this as a markup. Here's two, and here's your next one. 3 drives, okay? 1 drive, 2 drive, 3 drives. At this point, if they don't continue buying, your bearish volume divergence is going to give somebody an opportunity to fill a short at the highest price, and then they will market short to sell off in a nice, mean fashion. It's an escalator up elevator down. So just be aware of that. Let's go to a 4-hour time frame, and we are taking way too long. I'll make this fast. So here on the 4-hour time frame, you can see that we are already flirting with the Bollinger Band. We are outside of it. If you close this in 1 hour inside of the Bollinger Band, you risk a little bit of move to the downside. You got bearish divergence showing very, 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 very clearly on RSI. And yeah, being like, I don't want you to be bearish because everyone's in a good mood and be bullish, but this is stuff that you need to think about as a trader, like who's market buying here? Okay, if you're getting into your position here, who's market buying? If you were long from all the way on the bottom and you're not taking profit, a little bit of profit, anything here, I mean, okay, don't complain on the way back down. That's something that I would just tell you as nicely as possible. If this thing closes outside the Bollinger Band, you can look for the next continuation to take out those highs and look for that higher target into New York Open. So that's the hopeful thought. But if there is no excitement into Friday where people like to take risk off their trades, and this is the highest high of the local market, then I mean, if you don't take a head short, you might regret it. So that's all I'm going to say moving forward. I know that I'm going to be very unpopular for my short advice and caution for upside. But hey, someone needs to be the voice of reason in this market. And if it has got to be me, it's got to be me. Notice how Bitcoin was trying to play catch up to to Ethereum, because Bitcoin is not leading right now. It's the excitement in Ethereum and the upgrade. So here's ETH on a daily, going right to our EMA target of 2150, 2160. We'll see how it does here, but then the next target is 2330. I was always telling you guys the golden cross coming here, the 21 EMA crossing this blue is going to give you the next leg up. 21 crossing this EMA now, this is officially support now. 1850, 1860 is officially your new support. Your DCA long entry would be around 1920. You would DCA into 1850. You would use this support for a continuation to the upside. If this thing comes and tests back here, that's a good thing. If this thing tests back here and loses the 21 EMA, you still have layers of support at 1760, 1620, etc., 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 for you to scalp along. After 1600, I would be very cautious because then there's some kind of other nonsense going on. Keep in mind that in this consolidation, as we were over here, this breakout that occurred in a 1 minute candle, it was like $100, and then continuation on the right after daily close. These moves that occurred were at like perfect time to hurt shorts, and the shorts that got stopped out or liquidated is what helped fuel this fast pop up. Now that all that liquidity has been grabbed, if someone's not market buying here, then the opposite will come to play out. You see that the Bollinger Band is 2030. We're about to close outside of it. If the daily closes like this, good. We will look for continuation into the higher EMAs. Now, I was short all the way over here, like 1950. I DC'd into like 2020. I took some profit out. It was like very minor. I think it was like at 1205 or something like that. And then I just let this thing basically hit my stop. I think my stop, you see my fibs, if I were on, it was like at 2085 or 2090, something like that. I was like, oh yeah, if it goes nuclear, it's going to come to this level. And it went even past that level because of how many people probably got stopped out and liquidated. So the extension was so fast on a 1 minute candle, it was $100 pop. And that's meaning that anyone who was even 10x they're out, you know? So yeah, right here. So you can imagine all these people here, as we were going sideways, probably looking to stack a short, right? All the way here. Even I was, so it's not like you guys are the only ones. Even I was shorting here. And then as the short daily close occurred in this one volume candle, someone took advantage of it and basically liquidated, collected, and has done absolutely nothing since. Now everyone is holding their ETH. Otherwise, you would have saw retrace, right? No one is even trying to sell on this much bearish divergence. So by going sideways, what's going on is the oscillators are getting a reset. Once this oscillator cools off, you can do another impulse without um, making conditions overbought kind of situation. But this doesn't help an accumulator. This only helps the person who's trying to stop out people. This helps the exchange for liquidity. This, like, if you're a long-term believer and this is happening, why isn't the buying continuing? The only consensus I have now for ETH long term going up is that it's a limited asset that now people are going to be holding long term to stake, because you're not going to be mining ETH anymore. Now it's officially confirmed that everyone's going to buy ETH, hold it, stake it, and get interest by the market using ETH. So just keep that in mind. If ETH comes back to 2030, you can use that as a level of support. If it comes to 1960 to 1950, that's a long scalp opportunity. If you're buying over here, good luck to you. I don't have any suggestion or advice other than if the Bollinger Band is, if you're closing outside the Bollinger Band, great. I want you to make a new high and take some profit. But if after it does that condition is met, like of making the new high, and if it gets an instant rejection at any point and gets a hard move down back into the Bollinger Band, please be ready for that fast correction, because all the money of hurting the shorts is gone. Now, when are we going to hurt all those over leveraged FOMO longs getting in on top? Think of it like for the market maker. How is he going to pay for his weekend dinner? Okay. How does he make the most money? So the pain already came to the shorts. All I'm advising you now is keep a logical mindset for where we are going to retrace to test support. That's where you can get in a long and not be mad at me for not getting in this long and taking shorts or whatever you did that you did not do good on. I mean, this kind of market condition, how many can predict like how fast something can come other than, hey guys, level by level, if this level breaks, this is possible, if this occurs, this is possible. That's all we can do. It's not me buying and selling, okay, and it's definitely not you who can move the market. Whoever's moving the market is moving the market, and until they're done doing whatever their motive is, we're just gonna have to go along for the ride. Right now, the path of least resistance is looking like upside until we hit a resistance. And then if we consolidate, then the path of least resistance will be finding the support. And that's basically as simple as I want to make it. Right now, even on daily, you're outside of your bullish control zone. If the daily closes like this, you're going to look for new highs. And I get that. But going for new highs means that's an opportunity for you to DCA into a short. So I am aware that we're overbought. I am aware that we're outside the Bollinger Band, and I'm aware that we're at very new highs. But this just is like a warning sign of over exuberance. So, you know, take it for what you will. As I said, the short levels were up ahead at 23 and 2150. The downside is 20,023. You can take along there, or I'm gonna go off of the 21 EMA at 1950, and then from there, um, I'm gonna wait for the weekly candle CME close so I can see what Dixie closes at, and then we can get into weekend warrior mode and see what kind of market plan we can take this weekend and be profitable with. Because I'm assuming if ETH is doing this on shorter time frames of sideways consolidation, then we should get a nice sideways consolidation range to trade and scalp this weekend. If we've And I've seen this on weekends before. If the weekend comes and we are gonna just go upside and sideways, and then all of a sudden we get a nasty dump off, just keep in mind that if you want to buy, you can buy because CME will give you that gap. Right now is time to just really, really wait for a little bit more data. This is like a potential BART looking for you to come and collect profit at 2023. I'm just not excited to jump into a $5 consolidation overnight. Like all these consolidations when this occurs, it's like when I try to just like wait and set limits even higher. I don't like trading when we're consolidating like this after pumps. I only want the to see that test of support. So I'll be shorting here. You know, this pump I got definitely took three losses. So it was, you know, like 1,500 bucks about. So it's not like pennies. I did lose enough money to care, but it's something like you got to be okay with that loss because this was not retail. This was not retail. This was someone with way more money than me trying to get me out of my short. And I understand that. But in my mindset, he got his three drives. He's setting up a divergence. I mean, if this dude doesn't take his money back, then is this guy not a trader? Like, is he not going to come and test support at like 2075 or 2020? This is what I'm going to wait to see today. And this is what we're going to wait to see. So please trade accordingly, guys. If you have any questions or concerns, give me a call or DM me, message me, leave me a comment here on the YouTube video below. If you have any other assets you want to cover, leave it in the comment section below and I'll get back to you. Today at 10 o'clock Eastern when New York's open, one of our members, Candace, is going to go over order flow on EXO charts. If you're interested, please feel free to join us on our Discord server. It's free for everyone. The link is in the description of this video below, alongside all our other affiliate services that we use and recommend that help the channel grow. So thank you so much. And yeah, please feel free to join the Discord server. I'll be there as well. And if you guys have any other questions or concerns, please feel free to meet us there and we'll talk to you soon. Thank you so much, guys, for always watching these videos. Have a great day. Trade safe. I hope you're making money. Some of you took my money in my short. Where?